Good afternoon, everyone. My name is Famer Engin. I'm a Senior Regional Manager at the Export Development Canada. Welcome to the Clean Energy panel, where we're going to be discussing how to finance clean energy projects in Turkey. We have a fantastic panel today. Very proud to be the moderator of this panel. And I think it's a great panel because we have the whole spectrum in terms of the renewable energy financing. So if I may start with the introductions before the questions. So we have Yasemin Kuytak, who is a director at KfW Apex Bank. Welcome, Yasemin Hanım. We have Evren Aktaş, who is a senior project manager at Borsan EnBW. Welcome, Evren Bey. And we have Yiğit Bilmiş, who is a manager at project and acquisition finance at Garanti BBVA. Yiğit Bey, welcome to you as well. So if I may start maybe from the local the environment to provide a bit of a backdrop to our discussion. Evren Bey, could you please provide a snapshot of the current and upcoming projects in Turkey? What are some of the trends that the local investors are interested in? Thank you.
Hello, thank you, Famer Bey. Of course, I will try to summarize for the audience. I would like to start by giving just several numbers so that the audience get acquainted with the size of the electricity, general electricity and renewable energy sector in Turkey. So in total, Turkey has now 94,000 megawatts of installed capacity in electricity. And in 2020, it is expected that there will be around 290 terawatt hours of generation in total. Out of this total, coming to the renewable part, clean energy part, there's 8,300 megawatts of wind power plants in Turkey installed at the end of October. This is a recent number. 6,400 megawatts of solar power plants, let's say. And in total, adding all these up, 25,000 megawatts of renewable energy power plants, excluding dams, big dams. So in total, we can say that we are above 25% of the whole total installed capacity in renewable, again, excluding the dams. So renewable energy part of this installed power actually has increased considerably in the last 10 years, we can say, during which period there has been and there still is a group of incentive mechanisms for the renewable energy investments. This increased the interest and considerably physically the investments of the renewable energy power plants. This investment mechanism basically consisted of several items. The most important part of that was a feed-in tariff mechanism, which, according to the different types of renewable energy power plants, provided a constant $-cent-based kilowatt-hour price for 10 years of the first 10 years of the investment. In addition to that, there was a local domestic production incentive adding on top of the electricity price, constant electricity price. And in addition to these, most important parts, let's say, there are also several tax, custom tax, value-add tax incentives as a part of this incentive mechanism. This acted quite positively on the market, and we are now at 8,000 megawatts of wind power plants, let's say. I'm more into the wind part of this investment part. That's why I'm saying that in the first place. But the thing is, this incentive mechanism was supposed to end at the end of this year. Then, because of COVID negative effect the whole of the market, let's say, the government decided to extend it until June 2021. So the main issue in front of the renewable energy investments continuum in Turkey actually comes to this point now. In the recent years, the cost of investments in renewable energy decreased considerably, both in wind and much more in the solar sector. And the electricity governing system has also incorporated some different tender mechanisms into the system, like YEKAs, which are tendered in 1,000 megawatt groups, let's say, and also project-wise tenders. And these tenders, especially project-wise tenders, show that the cost has gone down and the investors are looking for, are okay with lower prices, let's say. Now, but those tender operations show that investors are quite aggressive, by the way, and most of them resulted in negative numbers, which says that the whole income structure of these projects will rely on firstly on the market price of the electricity and their tender price, which is going to be discounted from that market. So the projects became quite low profitable, came to low profitable levels. And the price of electricity going down, especially due to this COVID period, also with the increase of the USD-TL exchange rate, affected these projects negatively. So at this point, at the end of 2020, the renewable energy sector is actually coming to an important gateway, let's say. So either there should be a renewed incentive mechanism in place, most probably with a lower price than the 10 years ago, but of course then still with a constant income structure. Then comes the discussion of will it be in dollar terms or TL terms. Of course, the bankers, financial institution guests of ours in this panel would tell that much better than me, but either dollar-based or with a good type of escalation type TL-based incentive for a period which is appropriate to pay back the investments to be done by the investors is required. This seems from the investors' points of view in Turkey, I can say. This is important. So coming to the end of the first incentive mechanism, we are expecting a renewed mechanism with different conditions, of course, but to be able to ensure the financing of the investments. Then comes the point, of course, these renewable energy investments are capital heavy investments, and in Turkey there is not much accumulated capital. So the requirement is always some kind of attraction of the capital funding from the international market. When we look at this, why should these renewable energy investments continue in Turkey? I would like to pass to that, looking from the international, let's say, funding structures point of view. I think after, let's say, it is easy to say after, but I hope in the short period of time, this COVID era will be ending. And at the end of this era, there will be an let's say an increase in market, a big increase in economic activity. And this, in this period, after this COVID era, there will most probably be a more the markets will look for different ways of growing the economy in order to prevent situations like COVID in the future. And a part of this, we can see that, for example, Europe has developed a Green Deal mechanism. Now, European Union countries developed this mechanism. As a part of this Green Deal, European countries in the coming years, the main target is to be net zero carbon by 2050. They will be requiring, in addition to their own production in Europe, they will be requiring from the producers from outside Europe, which they import goods, with some green requirements. I think this will be, and similar structures most probably will come from other big economies in the world also. This will create a competitive environment where production with renewable energy will be incentivized internationally. So this is an important part of Turkey, an aspect of Turkey, I think, in terms of a motivation for the continuum of renewable energy investments, so that the country overall will be more competitive in terms of being green. But also, renewable energy, as it is name gives the meaning, doesn't use any resources. So basically, it is the cheapest source of energy, except for the investment funding period. So on the long run, if we invest in renewable energy power plants, we will be seeing a decreasing electricity cost for all sectors in Turkey in the medium run. So that should be another aspect to be evaluated for all funding, let's say big funds, international funds, or the banks, intermediary banks in Turkey, which are to provide some funding for the projects in Turkey.
And another aspect. Apologies to interrupt. So this is a very important point. So I want to make sure that we cover as a panel. Let's revisit this idea. I hope that international appetite in green energy can spur economic growth in Turkey, and let's definitely have a discussion. But without losing your first remarks on the feed-in tariff and the YEKDEM and so on, I want to also turn to our panelists and get their views. Maybe I can move over to Yasemin Hanım. Yasemin Hanım, you're one of the largest international lenders with respect to renewable investments in Turkey. So what is your view of kind of the pipeline or the project landscape that Evren Bey mentioned? And also, do you favor certain type of renewables over others? So what is your overall strategy? Thank you.
Thank you, Famer Bey, and thanks for the remarks made by Evren Bey. Just to give the audience maybe some background on who we are, KfW IPEX Bank is a subsidiary of KfW Group, which is a state-owned financial entity in Germany. And Germany is one of the countries that is in the forefront of renewable energy and switching to green technologies. So it is very important for our bank to support any kind of technology that is environmental friendly. With that in mind, of course, also with the involvement of European exporters, wind manufacturers mostly in the Turkish market. We were able to close a lot of renewable energy financings. Evren-based company Borsani MVW is one of our clients, and Garanti Bank is one of our co-lenders. So this is a nice group of renewable energy. And our portfolio in renewables in Turkey is quite large. It's about 500 million euros. And even this year, in a very, very difficult time period, we were able to close close to 150 million euros of new financing in wind. But coming back to your question, will this continue? Is there still an international appetite for renewable energy project? There is still an appetite because the benefit for international lenders like us was the existence of a feed-in tariff, which allowed us to benefit from favorable financing structures and the support of export credit agencies. With international lenders that have a large book in countries like Turkey, we need some risk mitigants, and ECA cover is one of them. And thanks to the European manufacturers' activities in Turkey, we were able to benefit from the ECA cover until now with the existence of the feed-in tariff. However, after next year, when the feed-in tariff system will change, we don't know still how and in what currency, there are two problems. First of all, if the currency is a Turkish lira, we need to have a mechanism that would ensure that the projects can still be bankable. And the second problem is the licenses. There are, as Evren Bey mentioned, licenses that are in place, but not so feasible. So we are having a hard time finding projects that would be in line with our requirements and the ECA's requirements. And the second is that the new tenders for licenses are not there yet. So, and it takes time before, even if you announce it now and grant the licenses, it takes time to develop these projects and get the permissions and come to a financeable stage. So we are lacking that backlog of projects to be financed, I think both for domestic lenders and international lenders, which I foresee as the biggest challenge for renewable projects. We don't favor a specific renewable type per se, but as international lenders benefiting from ECA, you need some foreign technology involved to finance. And in wind, that was more, but it's getting actually smaller. The domestic part is getting higher. But in that one, the ECAs are becoming more flexible. I can give the example of Euler Hermes, the German ECA, that is now covering more and more local sourcing. They have increased their quota for local sourcing. So that gives some advantage still to finance renewable projects, if there are projects, of course. Maybe that answers your question in a nutshell, and I can continue afterwards.
Thank you very much, Yasemin Hanım. Unmute myself. Okay, it worked, I believe. Thank you very much, Yasemin Hanım. So, Yiğit Bey, if I may pose the same question to you, but with the lens of a local lender. I believe Garanti at some point was the largest local lender in renewable. I'm not sure if it is still the case, but regardless, you are quite active in this market. So what is your view? And is the localization is kind of becoming more important for the market? You know, do you expect a capacity issue? Evren Bey also alluded to the financing capacity being a key issue in the market. So what are your thoughts around some of these topics? Thank you.
Thanks a lot, Famer Bey. Before starting answering your question, I think it will be helpful to introduce what Garanti Bank does in electricity sector in Turkey. As you said, we were at some point was the largest lender in the energy sector, but we are not at that point now. But I can say that we are one of the most prominent lenders in the sector, and I think we are the most active lender in energy sectors, and we are not doing only financing in the electricity market, but as you know, we are the only bank having an in-house electricity price forecast model. That's why, I mean, in addition to financing capabilities, I mean, we are dealing with any kind of energy projects and financing needs of those projects. We also provide advisory services to our clients in terms of, I mean, installed capacity forecast, demand forecast, and of course, eventually electricity price forecast for the upcoming 20 years, I can say. That's why, I mean, this in-house electricity price forecast model is especially beneficial for us in terms of building up our strategy and where to invest in the electricity market. I mean, in a nutshell, I can say that so far, I mean, both the international lenders and the Turkish lenders are keen to finance renewable projects, and it seems like if we have the, I mean, sensible supporting mechanisms in place, this appetite will continue. But of course, the question is that, I mean, what kind of a mechanism do we need in order to finance renewables further? And the main question is that, do we really need renewables in the future? I mean, and before answering this question, I would like to look at the overview of the electricity market. I mean, the history of the market, where we are at the moment and where we are going to be in the future. I mean, I think most of the people is aware that Turkey is currently suffering from an oversupply problem. And this was resulted because the demand forecasts in the past, I mean, were at like 6 to 7% growth figures per year, but the actual demand growth was realized at 3 to 4%. And looking at the history of the market, and based on those kind of high demand growth expectations, a lot of investment was made in the sector. And looking at the installed capacity of Turkey in 2002, it was at 32,000 megawatts, whereas, as Evren Bey mentioned, we reached 94,000 megawatts currently. It's almost tripled. And in order to triple this installed capacity, $90 billion of investment were made in electricity generation sector alone. And of course, how were these investments was financed? And by bank loans. Majority of the investments were financed by bank loans in an amount of $60 billion. And looking at the split of these investments, we can say that half of the investments were made in thermal business based on merchant prices, I can say, and the remaining half was made in renewables based on a feed-in tariff mechanism. And looking at the current situation of these two portfolio and comparing of, and when we compare these two different portfolios, we can say that, I mean, investors and lenders in the thermal side, I mean, are having difficulties in terms of getting back their equity, and forget even equity, getting back their loans, for instance. But in renewable side, because of the existence of feed-in tariff, I mean, they are really good, actually. And because of this track record, I can say, and banks have confidence in renewable projects which are benefiting from feed-in tariff, and they are keen to finance these projects further in the future. And that's why, I mean, in a nutshell, we can say that, I mean, we have a really, I mean, good mechanism, and this mechanism called YEKDEM in Turkish, the feed-in tariff mechanism. And we demonstrated that with this mechanism, we are able to increase our renewable installed capacity from 0 to, for instance, 8,000 megawatts in wind currently and 6,000 megawatts in solar. And these figures were 0 in the beginning of 2000s. That's why, I mean, by modifying this existing mechanism, which we demonstrated that it works well in terms of investors, in terms of the financing institutions, I can say, we are able to, and we will be able to finance renewables further in the future. And coming back to the question whether we need renewables in terms of meeting the demand, electricity demand in Turkey, I mean, as I mentioned, currently Turkey's electricity market is suffering from an oversupply. And we expect this oversupply to continue at least 4 to 5 years in the upcoming future. And from a supply demand point of view, I can say that additional renewables, we do not require additional renewables to meet our electricity demand, because we have, a lot of excess capacity in our hands at the moment. But we hope that renewable investments will continue in Turkey, because these investments are, first of all, very important in terms of fight against current account deficit. And current account deficit is a major problem in Turkish economy. And by making more renewables online in the system, we can actually cope with this current account deficit problem. And this is the first reason why we think renewable investments should continue in the future. Not from a supply and demand point of view, but from a current account deficit point of view. These investments are economically sensible to make. They make sense. And that's why we think we believe these investments should be supported in the future as well, by modifying the current feed-in tariff mechanism according to the current needs of the market. And the second one, of course, is that in addition to current account deficit, renewables are actually a good way to attract foreign investment into country from a macroeconomic point of view. And by providing the sufficient mechanisms to support investors and financing institutions, you will be able to attract long-term foreign investment in the country, which will eventually support the foreign reserves of the economy as well. And based on these two main reasons, we think we need to support renewables in the future as well. And because renewables are so important for the economic growth of Turkey, we need to support them with sufficient feed-in tariff mechanisms. And in the past, we have seen that feed-in tariff works well in terms of financing renewables, investing in renewables. And by modifying feed-in tariff to current figures, current investment costs of renewable projects, we will be able to support these projects in the future as well.
Yiğit Bey, thank you very much. This is a good way to kind of circle back to Evren Bey's point about international investment spurring growth in Turkey. As an international lender, I also would like to say a couple of words before going back to Evren Bey to introduce EDC. It's a bit of a bummer that I think I'm the only one on the panel who hasn't supported EMBW, but look forward to it. EDC is the official export credit agency of Canada. We're one of the largest ECAs in the world. We have AAA credit rating. We have about $65 billion worth of assets, and we facilitate about $100 billion worth of transactions every year around the world. So it is a fairly large ECA within the ECA world, and it's a very unique ECA as well. I think we're the only ECA that can provide both basically commercial loans as well as ECA loans. This is quite unique, and I think fits very well in terms of the market's needs. As discussed, the localization is a major defining factor for the industry. So EDC can play both like a bank and also like an ECA to provide financing capacity to the deals wherever the need might be. So definitely look forward to working on the renewable projects with the people in the audience. And I think one theme I can mention is that globally more and more international lenders are kind of shying away from oil and gas and basically from mining and so on because of the environmental impact. Oil and gas and mining obviously are important sectors for Canada. We're going to be supporting those Canadian companies globally, but on the international buyer side, I think we want to do more on the clean energy side. So there's going to be appetite from EDC, I think from other international investors and lenders as well in the space, as pretty much now everyone has a GHG target announced. So Evren Bey, if you can maybe circle back to your point. I apologize, I interrupted your train of thought, but please continue. As Yiğit Bey mentioned that yes, there are challenges as demand and supply is kind of a bit of out of sync. Yet this kind of can be a source for future growth for the Turkish economy. So please continue. I just want to also mention that we have about 10 minutes, so I want to do a full circle, if I may. So please continue. You are on mute, I believe, Evren Bey. Evren Bey, if you could unmute yourself.
Okay, sorry, I'm back now. What Yiğit Bey mentioned was an interesting point, and he gave solid reasons supporting the renewable energy investments need for the coming years as well. Although there seems to be an excess supply problem. I would like to add to that by saying that because renewable energy will be cheap in the mid-run, the merit order effect will naturally decrease the excess supply through the most expensive electricity generation sources. So I think the market mechanism will take renewable energy in regardless of the excess supply, let's say, scenery right now. Because the renewable energy will replace the resource using conventional power plants, and it has been doing that. Natural gas power plant is a big example for that. I mean, Turkey was supplying more than 50%, nearly 60% of its electricity from natural gas, let's say 6-7 years ago. Now it's below 30%. So in addition to, as Yiğit Bey said, decreasing the current account deficit by decreasing the amount of natural gas we are importing as a part of that, also the renewable energy power plants will replace those which are probably over 20,000 megawatts or so still. And as an energy mix, of course, renewable power plants should be backed up with base power plants, which should be there to cover the volatility of the renewable sources during days, during weeks, let's say. But as long as that is in place, renewable energy power plants can increase in installed power without jeopardizing, let's say, the market with excess supply. That's how I think about it. And also, when it comes to, expand or the effect to the market, I think the renewable energy sectors or investments positive effect to Turkish economy is not limited with its being clean and generating electricity, but also, as Yasemin Hanım mentioned, there have been a number of manufacturing plant investments now in the recent years through YEKA tenders, and also through, for example, singular investments of solar power panel manufacturers and all. So when looking at this now, we see that there are, for example, for wind power plants, there are blade manufacturers in Turkey, but there are tower manufacturers in Turkey. There started to be generator manufacturers in Turkey. So supporting the renewable energy investments in Turkey actually supports Turkey's renewable energy production. I mean, the generator production as well, the economic sector as well. So I think it is very important from that point of view also. And in addition to the like production sector, the service sector has also increased. So there are now over 3,000 wind turbines in Turkey, 3,500 or so, and they all need servicing, replacement of parts, etc. So 5 years back, 7 years back, I remember all the installation, commissioning teams were coming from foreign countries, from Denmark, Germany. Now we are working on 2 power plants currently. Investments are going on. And in both of them, all local people are working there for the installation commissioning work. So definitely the renewable energy power plant investments also improves the sector as a whole in Turkey. And this is a positive effect in the overall economy as well.
Thank you very much, Evren Bey. For sure, definitely very important points. So we have about 3-4 minutes left. So very quickly, Yasemin Hanım, do you have a message to the investors who would like to work with KfW? What are some of the main criteria that you look for when you work with investors? Thank you.
Thank you, Famer Bey. For renewable energy, the most important criteria for our bank is that the turbines or the equipment is coming from Europe. That's a special one because we are a state-owned German bank. And when that criteria is fulfilled, of course, the next criteria is that the project is well developed and is meeting the environmental and social standards. I think the most important thing when you're working with international lenders and ECAs is that you have to have reportings that are done in international standards, not just having your CHED report, but also meeting a lot of criteria, including equator principles, IFC performance standards, and things like that. And for our bank, another criteria is that we finance projects that are above 25 to 30 million euro in investment size. There are other international lenders who can do less than that, but that's a very KfW specific. And the projects we have financed in Turkey has always been more than 50 million euro per project. So as I said, this is a very KfW IPEX specific thing, but we globally lend quite a lot to renewables, at least 3 billion each year, and we are doing mostly larger projects in the market. But happy to work with the investors of Turkey.
Thank you very much, Yasemin Hanım. For sure, I think KfW is one of the key lenders in the market. Yiğit Bey, if I may ask the same question to you, so what is your message to the investors who want to work with Garanti?
We are still keen to finance renewables further as long as they benefit from a floor price mechanism, and either feed-in tariff or PPAs may be discussed in the future. And we know that the new feed-in tariff after 2021 June will be denominated in Turkish liras, but we do not know the escalation mechanism or the price. I mean, those details will be important in terms of having visibility, and we need to see those details, I think, by the middle of next year, so that investors can make their feasibilities and get in contact with the banks in terms of financing. And from onwards, I can say that, merchant risk, we do not have appetite to finance any projects that are merchant, and this includes the negative priced merchant wind projects, for instance. But for the projects that are benefiting from feed-in tariff, we are able to provide financing. We look at financial models for the debt sizing. We look at the debt sizing with the 90 figures of the technical advisor, and we can provide maturities up to 12 or 14 years, so that we are able to take some limited merchant risk after the feed-in tariff period, in the tail period, I can say. And we are still confident in the market, and as long as the floor price mechanism is satisfied, we will be able to finance renewables further. I can say this as a closing remark. And from a global point of view, I can say that, I mean, Turkey, yes, it's suffering from an oversupply problem, but we have an historical opportunity, I think, in terms of succeeding this renewable transformation.
Well, thank you very much, Yiğit Bey, for your valuable remarks. I think this takes us to the end of our panel. I want to thank our panelists for their valuable remarks, and also want to thank all the audience for their time. Thank you, and have a good day.
Thank you. Thank you so much.
Thank you.